Well, it's day 2 of our special user's guide to the spring real estate market. All this week, we're covering everything you need to know about today's housing market, whether you're buying, selling, or staying put. Tomorrow, HGTV's power broker and staging expert Mike Aubrey is here with his best-kept secrets to selling your home. But tonight, we cover this. How do you get a loan? The landscape, the lending landscape, that is changing dramatically, and the big players in the market aren't necessarily the big banks. We've got advice tonight from Greg McBride, Senior Vice President and Chief Financial Analyst for Bankrate.com. Greg, welcome back to the show. So good to have you here. Let's start with first things first here. The lending market has eased somewhat. It's not as tight as it was. How would you describe the tone of lending right now?
Well, the pendulum, Gerri, that had swung way too far to the side of easy credit in 2005, 2006, 2007, and then swung all the way to the other side toward very tight credit in the aftermath of the financial crisis. I think now it's pretty close to the middle for most borrowers. Those that are still finding tight credit are those that are particularly small business owners, people that have a difficult time proving their income. They're the ones that are on the outside looking in at this point.
All right, talk about on the outside looking in, low-income folks out there who may qualify for some of these government programs. It seems like 2006 all over again, in my view. Take a look at FHA's mortgage qualifications. You can get a loan with a credit score of 580 and a down payment of just 3.5%. Does this feel like looking over your shoulder in the rearview mirror?
Yeah, it doesn't sit well with me at all, Gerri, simply because when you intersect low down payments with low credit scores, it's a recipe for problems. Look, I don't have any problem with somebody with a 720 credit score making a 3% down payment. But you bring that down to somebody with a 620 credit score, and that's where I got a problem. Because simply, we've seen this movie before, and yeah, you're right. It does feel a little bit like deja vu, Gerri.
And that 620 credit score you mentioned, this is Fannie Mae and Freddie Mac. That's their minimum with a down payment of 3%. I agree with you. Put down 3% if you have a great credit score and a great history of paying off your debt. But otherwise, you need to prove it. Well, speaking of that, there's a whole different category, groups of companies that are now originating mortgages. Yes, Wells Fargo is number 1, JP Morgan number 2, but now Quicken number 3. And let me tell you, this list of banks that we got from Inside Mortgage Finance, some of these companies I don't even know. Greg, what happened? Where are the big banks?
Well, a lot of the big banks have retreated from mortgage origination simply because of all the risk that's involved with it. Multi-billion-dollar fines that they're paying from as a result of loans that were done during prior to the financial crisis. And then also the buyback risk, the risk that a loan they issue, they could be forced to buy back from Fannie Mae, Freddie Mac, or the FHA at a later date if the borrower defaults or, even if there's a I not dotted or T not crossed.
Is that a result of the new mortgage rules that they're suddenly facing this buyback risk?
Partly, but I think, more broadly, it's just that's a vestige of the aftermath of the financial crisis. Even before Dodd-Frank went into effect, that buyback risk for lenders or mortgage originators went way up.
So there's a silver lining here, perhaps. If you thought you were going to get your loan from a big bank, they have reduced their stakes in this market from 61% a couple of years ago to 33% today. But you may see them again because they'll probably service your loan. There's that. The big banks are definitely involved in that business. So tell me now, Greg, you were so expert on this. What's your advice to people out there who are trying to get a loan? What's the 1, 2, 3 steps? How do you do it?
Well, first of all, I think the rules of the road here, Gerri, are good credit, proof of income, and money for a down payment. Those are really the 3 things you need. If you have those 3, you're in business. I'd start early by pulling copies of your credit reports, make sure that everything there is buttoned up and that there are no errors. Then, get pre-qualified for a mortgage. And then when it comes time, when you've put that offer on the place, you're not necessarily married to the lender that gave you the pre-qualification. It's time to shop around. Apply with up to 3 different lenders on the same day. That's the important thing, on the same day. Then you can really, truly compare the terms top to bottom, not just the interest rate, but also the fees that are being charged. And you can pick your dance partner from that group.
I'll pick my dance partner anyway I like it. A good place to go is Bankrate.com. You can figure out who's local in your market and what kind of deals they're offering out there. Greg, thanks for coming on the show. Good to see you.
Thank you, Gerri.